Well, let's take a look at what's driving the Kenyan market on the day. Firstly, as you can see, the market's slipping back once again today by 0.5% to 4,551 points. Looking at how the currency is faring for the day, 87.6 against the dollar. You're looking at ever so slight shilling appreciation as it stands this hour, up by around 0.1% to the dollar. Well, let's move on to our studios in Nairobi, get an update on some of the factors driving the markets today. Rufus Mwanyasi, investment analyst at Tsavo Securities, is our market watcher. Rufus, thanks for joining us today. So let's just take a look at the gainers list. I mean, we had TransCentury and Samir Africa topping the gainers today. What stood out for you when it comes to that? Because I suppose not enough to counter the overall negative slide that we saw on the blue chip index.
Well, yes. First of all, I'd like to say that the market is really, gone on a deceleration mode. And I think we are likely to see a pullback further, maybe in the region of about 4.5%, maybe for this week and even next week. Yes, and a lot of speculators and some of the traders actually, pulling back as we head into the election. But just to talk about the gainers today, yes, we had TransCentury, and I think a lot of investors betting on that stock, just looking at the whole macro level, and on the investments in infrastructure. And I think this has been the most dominant theme for investors putting their money into that stock. And, trading between 20 and 30 for the last 6 months, I think from a technical point of view, the stock looks like it wants to trend upwards. And I think most investors are rushing into that stock. Coming to Samir Africa, yes, despite having seen, world rubber prices inching upwards, I think the market is confident that these guys are going to do well in terms of maintaining their cost downwards and putting a lid onto that, and just a lot of restructuring here and there. I think the investors are actually bullish about that stock, and as you see, it was up about 2.33% today. Yeah.
Well, when it comes to Samir Africa, I mean, who are their main clients, and what type of geographic presence do they have in East Africa?
Yeah, first of all, we have seen the company has been trying to forge into the regional market, but I think the results have not been quite successful to the levels that the market think should be, and I think maybe they should do more on that front. But I think in terms of market share, we think it's very solid. But I think the problems that particular firm faces is more internal than external. In terms of just making sure that there's more efficiency, just putting a lid on the costs, and so that and also just to look, as you say, forge into other markets to boost their sales. But of course, when I say there's little external challenges, of course there's one challenge which I think it still sticks out there, which is competition, particularly from guys importing tires from outside. And I think going forward, that also is going to be one of the challenges they have to deal with.
Yeah, and let's look at the losers list today. Kenel Cobble stands out, closing at 13 shillings 55 cents, and down over 3% today. And of course, this was a stock that for some time had been gaining back market share from the likes of Total. How's the company doing right now? I mean, what are your thoughts on the prospects for this oil marketer in light of the space where we do have a potential oil and gas boom in East Africa?
Well, I think much of the trading that surrounds that particular stock are actually unique to it. As you know, last year there was a talk that there could be a possible deal between it and Puma Energy, but that's a deal that never fell through. And actually, as we entered this week, the talk in the market was that that deal is not going to come through. So, and I think a lot of people are turning against that stock. As you saw, it's really dipped, and we expect as the information comes through, we'll likely see taking a hit. Much more. Just looking at it, even from in terms of market share, last year it actually lost market share to some of its rivals, actually Total, and it fell down to about 20%, which it's really a far distance from where it used to control about 25%. So I guess going forward, when you look at all these fundamentals shifting and all that, I think the guys are just saying, you know what, let's shed off some of our stake in that firm until we see a bit of improvement on that end.
Yeah, and before you go, housing finance, we mentioned earlier, releasing results and overall profits slipping back by 7%. So you've got interest income on the one hand rising by almost 50%, 47% up to 5.07 billion shillings, but it was interest expenses which really outpaced the growth there, and that's why we're seeing the profit dipping back. What do you make of that, and how's the company going to manage this going forward?
Well, I think that's going to be a very interesting challenge for the firm because, as you see, they've really done well in terms of, you know, spreading themselves out there, you know, across the country and opening new branches to new towns. And I guess that's the reason why we saw, you know, the 45% jump in terms of interest income. But of course, as you said, you know, interest rate expenses have been quite a challenge. They've almost more than doubled. And I think going forward, that's going to be an interesting challenge. How they're going to, just deal with it. Because on one hand, they have to increase their customer deposits, but on the other hand, they also have to, tackle that issue of interest rate rates. But of course, it's not only the interest expenses that hit the company. You also seen that the loan losses also, increased a little bit, although marginally by about 6%. And that's the reason why we had almost, flat profitability. But I guess, going forward, as you said, I think it's going to be an interesting challenge for them to maintain the interest rates low. As you may have noticed that our interest rates have gone down to to lower than 5%. So in my view, going maybe just a projection in the next 6 months, I think they're going to do well in terms of revising down the interest rate rates, because we're thinking the rates are going to still remain below 5% for the rest of this year. So I guess maybe come full year 2013, I think there's going to be an upside in terms of the profitability.